So we're in your business math and we're in chapter 1, section 12, and we're going to be talking about the ledger. This is the last section before we go into your quizzes and tests here. So the ledger. So we just went over the general journals. Remember the general journals, and that this has to do with the general journals. Here's a general journal, and we went over these and how to account whether they're debits or credits, and they have to balance each other out, and each entry will have a debit and a credit. And now we're going to have account number. See where it says account number here? So we're going to figure out what account number, so we can take this account and then put it into a ledger. Why do we do this? Well, let's find out. So basically, it would take a long time to locate a general journal every time you charged an order and you were looking for an account. And so therefore, the general journal is used to help organize all of your general ledger. So we're talking about the general ledger. So now we have the general journal. That's our daily or monthly journal, right? And now we're going to have a general ledger. And this is so we can organize all of our assets and all of our liabilities under one ledger. And we can just look at that, and then we can see where we're at. So instead of searching all through the general journal for each order and payment made, the ledger has a special page for accounts payable. So we can just look at the accounts payable, all of the accounts payable under one, all of the liabilities under one section. And that way it is not so confusing. So that's what the ledger is. So you're going to take the information off of your journals and put them on a ledger. So it says, in order to find specific accounts easily in a ledger, each account is assigned a number. So here we'll see some numbers. All accounts are grouped according to their categories. And of course we have, 6 categories. We have the assets. They're going to be assigned numbers 100 to 199. Liabilities are going to be assigned 200 to 299. Capital, 300 to 399. So we have those 3 things: assets, liabilities, and capital. And then the other 3 things over here, basically from the capital, we're going to have more numbers, and these numbers are going to be income, expenses. And so let's look at these. Here they are. See, when categorizing accounts and assigning numbers, you are compiling a chart of accounts. So here's a chart of accounts. So here you have assets all under, it's like if you were doing the Dewey Decimal System in the library or something. So here we have all these numbers of hundreds. In the 100 to 199 would be your assets. 200 to 299 would be your liabilities. 300 to 399 would be your capital. 400 to 499 income. 500 to 599 operating expenses. And then on to 600 to 699 cost of goods. So just to review, assets would be like your cash, your accounts receivable, equipment, land, buildings, all these things, motor vehicles, office furniture, assets. Liabilities would be your accounts payable, what you owe, and notes payable, mortgages. Capital would be your owner's equity. Anytime you say owner's equity, it means capital. Income would be all your sales, interest income. Onto your operating expenses, which is probably the largest of expenses in the 500. So you'll have like expenses or salaries and wages you're paying out, taxes, repairs, equipment, placements, travel, education, supplies, utilities, telephone, all these under the operating expenses. Cost of goods sold would be your raw materials, a factory overhead, direct labor at the factory. That's because you're going to be where you buy your cost of goods. So you're going to have these 6 categories of 6 categories we've been talking about, and they're each going to have a number. So we could put them all together in a ledger, so we can look and say, okay, these are our operating expenses for the whole year, depending on what, and it'd be at the date and everything, and then we can look back at our journal and find out right where we got them. This is the method of accounting. So it says here, have you ever written a computer program? If you have, you know you know that you leave gaps between program lines, so that those gaps is where if you have more things, you can have a gap to chart them in, right? So they do leave gaps. So let's go on to the exercises and go over. We're just going to go over one exercise because these are all pretty much the same. So here we have to organize the accounts in proper order with the assets and liabilities, capital accounts, income, and operating expenses and cost of goods. Those 6 things. So here we have Appliance Center, and we see his sales. The sales, his sales are income, so we put it in 400. Miscellaneous expenses. Expenses is the word we're putting under expenses. Store merchandise is an asset. Basically, each of these is actually 2 things, but we put it under 100 for assets. Bank loan, basically a bank loan would be a liability, so number 200s are liabilities. Service fees, income, under the 400. Income is the word, income under 400. License expense, expense 500. Salary and wage expense 500. Telephone expense 500. Travel expense 500. These are all expenses. Interest income is going to be under 400 because it's income. Building and land is an asset, and capital under 300. See how this went? So let's do the Allen's Garage here. I'm not going to do these other 2 because they're just similar. Rent expense, okay, a rent expense. Here expense would be 500. So on to office furniture. And see, we'll put it as 501. That means that's going to be under, but it's going to be in the 500s. Office furniture is asset under 100, 101. We put telephone expense 500, 510. So you put them under different. It's all going to be in the 500s. Small tools as asset, trucks as asset, 100 in the hundreds. Depreciation expense, another expense, 520. It's a 500s. Repair expense, 530. On interest expense, all these are expenses, and this one here is fees, income. It's different. Mr. Allen Capital is 300. Farnsworth Mortgage Company, you owe Farnsworth Mortgage Companies a mortgage. That means you have to pay your mortgage bill, and that would be a liability. It would be 200. So see how we did that? So let's go on to the next. It says here, transferring the journal entry to the general ledger is posting. So we're going to post it to the ledger. Within the ledger, each account has its own page, and the accounts are kept in numerical order. So then you can look it up. So you have the numbers, just like you would in a library when you're looking up a book. You'd have the numbers to look it up, right, in numerical order. And so they're all organized. So this posting homework is backbreaking. I don't know about that, but anyway. So let's see what a ledger looks like and how we transfer it. So here is here's a general ledger. So you have the title of the business under the general ledger. Now this will be the count number where we're going to put the count number, and this is very important because we have to look this up. This number would tell us where to look it up, what account number is, or how you're going to put it in, file it. And so here you have, of course, the date, the explanation, and the post reference. This is very important because this will tell you what journal it came from, post reference. So, and here it would be the debits, and here are the credits that have to do with this same thing, the credits. So you put the date, explanation, post reference, and the credit. See how it's different? The general ledger form is slightly different from the journal, as you can see in the debit column. Of course, this is important. Now, in posting the reference, you record the journal, the entry name, and the page number in abbreviated form. This GJ1 would be General Journal 1. It's abbreviated. So we're going to write General Journal 1 in the post reference if it came from that journal. If it came from another journal, a different kind of journal, could be CDJ2, and that would be cash disbursements. And this would be CRJ, which would be cash receipts. PJ would be purchases. sales journal, but for this test and everything, we're just going to do the general journal. And then number 1 would be that page of the general journal. So let's see how we transfer this. So to transfer this is pretty easy. So we just look here. This is our general journal, right? Now you can see, and this is our general ledger. The ledger is where we're going to put it in our library ledger, right? And this is our journal. So first of all, we're going to look here. This is going to be account 150. So it's in the 100, so you know this whole thing is going to be just about assets. So we have an account number 150, and we put the account on our general, so we know where to find it in our ledger. So office furniture is going to be, it's a debit because it's a asset, and it's $150 there, or let's say $150, or 100, I'm not 150, 150 account, $593 for the furniture. So we put this account number at 150 right here, and then we can look it up there, and we look it up in the ledger at 150. So very important there. Now, as for the date, you're going to put the date here, and the same date goes down. This is on August 18th of 2024. So we put down the same date here on our ledger, and then we're going to put down the page. So we're going to pay GJ. This is our general ledger, and page number 1. So we know we can just look it up right away from which journal it came from. And now we're going to put down, basically, this is account 150, so we're only going to put down the assets, which would be, this asset would be 150, and so we're going to put it down here. And what was it, $593? So we put that there, $593. And so, so just knowing, okay, here is the account number. The account number is written up here in the general, same account number here to look it up. The debit number is right here. We're just charting this office furniture, right? And so down we have the posting is GJ1. So we know we can look at this journal. So that tells us what page it is right there, and the date. So very easy. So here we have, now we're going to do on a different ledger page, we're going to do, we had the office furniture, but now we're going to put on the accounts payable, which would be a liability. So it's going to be a different page. So we have a liability here. Well, this is account number 101. So not just liability, it's still in the asset, but it's the cash that we spent for the asset. So it's the cash. So it's on a different one, 101. When I say liability, it would have been a liability if we didn't pay in cash. But when we pay cash, then of course it's taken away from our assets of cash. So we paid cash for it. So it's 101, which 100 means asset thing, but it's going to be a credit now because it means we lowered the asset and paid cash for it. So we record here GJ1 on the credit and the date. And so this is Corky's Pet Store. This is going to be account number 101. So on the ledger. So just to know, to record the date. The year is written above, here's August 18th, and there's the year above there. So that's the date. Transfer the dollar amount in the general. There's the dollar amount, whether it's credit or debit. We put it wherever. Fill in the posting reference. The posting reference, of course, here we filled this in, so it's on the general journal 1. So we know page 1, general journal, page 1. And then record the account number from the general ledger account to the general. So you'll take this account number 101 and you'll put it on your general ledger. So an explanation is not needed in the ledger unless it's the very first in a set of books called the opening entry. So you don't have to put the exclamation in here each time unless you're opening or carried over to the next column to balance an entry. So just so there are special journals. With some business have subsidiary ledgers, different kinds of ledgers, depending on what the ledger, how big the business is, and some have accounts payable ledger and other ledgers. So let's go over this first part. So Elaine Hoffman owns a small donut shop. Here is her chart of accounts in her general journal transaction from January 1st to January 11th. The general journal entries have been posted to the ledger. So here they are, and you can see these will be your assets, cash, and they each have a number, equipment, motor vehicles, they're all in the assets. Liabilities are in the 200s here, and onto the 300s for capital, income sales, 400s, operating expenses, 500s, and cost of goods are in the 600s. Okay, let's go over her donut shop. Okay, so the first one was with cash, and she had basically, remember in the beginning here with her donut shop, you can see she had cash. This is the general journal. So not remember, but this is the general journal. So this is not the ledger. We're going to take the information on this and put it on the ledger. So here's the cash. She had $35,000 of cash to start her business. And so this is going to be a debit of asset, right? And then basically this is also capital. So this is her capital, and the capital will be under 300s, 305. And so you have these two in the midst. And then again, you'll have equipment. She purchased some equipment here for $869. That's an asset, be 110. So you can see how the journal is. Now we're going to take this journal and put it into a ledger, and ledgers for each subject. Now, just ignore all this because this is for a different problem. Just look at the black, not the blue here. So we have Elaine's Donut Shop, general ledger. So this is for cash. She invested in $35,000 into her business. And so this is account number 105, and the hundreds means it's an asset. And so we go here and we have on January 1st, the debit was $35,000, and she wrote $35,000 in. So, and then on January 7th, she had another debit of an asset. Let's look there. January 7th down here, she bought a truck too. See where she bought a truck for $18,290, and this too would be an asset, you know. So we put that there. Wait. From the 7th, 3,500 or 3,563. Is that the right one? Yeah. Oh no, this was another asset, cash. She'll actually put the truck under a different one for an asset on 115, but this is 105, and this was cash. The cash sales was a debit in her cash sales, and so we put that in there. So we put it over here. We put, of course, we're on 105, and we'll put the debit there. So of cash. So let's go on to the next one so we can see. Elaine's Donut Shop, general ledger. This is account number 110. So 110 would be, of course, assets too. And so this was on January 3rd. Let's see what she had on January 3rd. So on January 3rd, she had purchased, January 3rd, on 110, she purchased $869. You know, so this purchase was cash purchase, 2 industrial mixers. These are mixers for her donut shop, mixers. And so she purchased these mixers, and so now she has the donut shop ledger, and she purchased a debit of $869 cash on January 3rd. So this is on account 110. So the motor vehicles, this was the motor vehicles, and she do that on account number 115. We look back here where we look up 115. So where's 115? Should be right there, our delivery truck of $18,290. We would put that in there. So you can see how she transfers these over. So I'm gonna stop right here, and then I have to take a break here, and I'll come back in just a minute.